at current Tuesday, October the 29th, 5 a.m. in the a.m. Eastern Standard Time. Let's get to it. What we're going to talk about this morning are the headlines. Then we're going to segue over into the futures market. But first, if you would, please hit that like button, subscribe button, bell button, get notified of all my future commentary. And if you're watching us on YouTube, can I get a share out of you, please? I'd really like to build my Twitter following. And let's get to the news of the day. First off, what is pending is, of course, tomorrow's Federal Reserve announcement. Will they or won't they cut interest rates? And the expectation is that they will cut interest rates. And that should bode well for the markets as a whole, at least a knee-jerk reaction. But let's keep in mind something. The markets have gotten really ahead of themselves in a way. And I'm going to go over some charts that are just simply being ignored. And I continue to find myself pounding the table about economic data not coming out good, and it just keeps getting a lot worse, yet the markets keep getting bid up. Now, I have been a proponent of the fact that the markets would break out, but they've really gotten ahead of themselves and just ignoring some real serious headline risk, and it's concerning. All right, so let's get to some headlines. We had first a chart of Alphabet, Google. They were down dramatically in the after hours. You can see here, they attempted to break out yesterday. They were rejected, and then earnings after the bell just took the shares down. They did recover some, but when you take a look at the proximate cause of the sell-off on Google, they missed on EPS, and by a wide mile. And the traffic acquisition cost, their cost rose for the quarter. Their advertising revenue continues to grow. Annual growth was slowing. It's begun to pick up. And I'm looking for anything here about legal fees, because they have been clashing with the government of late, and my guess is that they are going to be lawyering up in advance of any antitrust. Here we go. U.S. and foreign antitrust regulators are scrutinizing the company. This is what I warned about over a year ago. Go back to my videos, April, March of 2018. I was talking about this. The U.S. Justice Department announced last week that it's opening a broad antitrust review of big tech, guaranteed their legal costs are going up, including Google, and the DOJ launched a separate antitrust probe into Google. So I have two probes in the United States, not to mention what's going on over in Europe. So guaranteed that there are expenditures related to, not guaranteed, I'm confident that there are expenditures related to legal fees that are not helping Google, Alphabet. What else is out there? HSBC. This is a real winner of a bank. You go type in HSBC, shady past, and I'm sure you're going to get some real serious information about HSBC in a heartbeat. They have a very, very slimy history. HSBC CEOs vows to remodel bank after profits plunge 24%. I won't go into great detail here. A lot of this has to do with Hong Kong, but Lord knows what else is going on with their internal doings there. And I want to share a chart, and this should be disturbing to everyone. And this is just data that continues to mount. I watch it, and I save it. This is a print screen. Delinquents masses, more Americans than ever, are at least 90 days behind on their auto loan. Think about this. You have more people that are 90 days behind on their auto loans than ever before. And this goes well past the financial crisis and even before the dot-com bust. So the question needs to be how does this get resolved? Yet the market keeps breaking out. And I will share, let's go to the futures. Good morning, Patrick. Good morning, Sam. Good morning, RL. Now, Patrick, you move around a lot in Tennessee now. You were down in the Carolinas recently, no? Sam, S&P futures, low volume, retesting the break. That's what I'm thinking about. Yeah. So the economic data is a bit concerning. Let's go to the pre-market futures action. And since Sam brought up the S&P, let's start with that first. All right, so we're down slightly this morning. We're well above the 3,000 mark. Now, what we did yesterday was we booked profits. Hey, Kurt, good morning to you. We booked profits up here yesterday on this surge higher. So we are no longer long of the S&P 500. We expected a pullback. We got the pullback. Same deal held true for the IWM. Let's just go through these really quick because we closed out positions yesterday. We were overbought relative to the third standard deviation Bollinger Band. We booked those profits, made them real yesterday. I simply could not allow myself to stay long of the IWM and the S&P 500 trading above the third standard deviation Bollinger Band on a not only a 1 hour basis, this is a 1 hour chart, on a 4 hour basis, folks. 4 hour basis, well above there, I had to book profits. Going back to the S&P 500 4 hour chart to illustrate why. Here you go. So we did roll over a bit. We may see some additional weakness this morning. We did short Tesla yesterday. Right up here, using the 335 put contracts expiring on, I believe it's the 8th of November, which is not, of course, this week, but the next week. And we booked those profits pretty quickly. We made about a 20% profit on that trade yesterday. And on the TZA, so we're looking at the TZA. And you can see that it's popping up. The TZA puts you long of the IWM. So we spent a few minutes yesterday cleaning up our positions and taking profits, making them real, moving to the sidelines in anticipation of the Federal Reserve meeting. And what happens after that? Well, we don't know yet. We know that the probability of the knee-jerk reaction after the Fed announcement is usually the wrong announcement. I'm pretty confident that Jay Powell is going to have one of his long-winded press conferences. I wish they wouldn't do that. So beware of the knee-jerk reaction tomorrow afternoon on this market. That knee-jerk reaction may get carried out another day so that traders and computers can digest what Jay Powell has to say tomorrow. Now, going over to the U.S. dollar. The dollar is fairly strong. And what's the cause of that strength? I'm not quite sure. When I went to bed last night, I was taking a look at the yen, and the yen was firming up rather nicely. I want to see whether or not we are holding that rally on the yen. a little bit of strength here. We've pulled back some, but we saw some strength last night, and we're pulling back some. Let's take a look at the euro really quick. Now, I'm surprised that the dollar did as well as it did yesterday and into today with the news out of the EU that they were going to extend the deadline for a Brexit deal. I don't know if that's been accepted yet. I really didn't check the news on it. Yeah, the euro is very weak. They reckon the Fed will start hiking next year. Yeah, you know what? They can trend. I think that I know where you're coming from. I think that in all probability, they will continue down that road of speaking hawkishly but acting dovishly. So if they take that path, I think that it is very bearish for the markets because the markets need expectations set. Because despite the fact that you've had a Fed that's been intervening and cutting rates, the markets have just recently broken out. They haven't capitalized all that much on the Federal Reserve's actions thus far. And if they start talking really, really hawkishly about rates rising, keep in mind that yields have been rising. They gapped up higher this week. So they don't really need to go out and be uber hawkish on yields because the markets are taking up yields anyway. Simply take a look at the price of the 30-year Treasury bond. It's moving this morning on a 1-hour chart. When you take a look at a weekly chart, this is not a wonderful chart, right? We have the potential for a double top here and a continuation breakdown on the bond market. You take a look at my quarterly chart, monthly chart of the 30-year bond price. It's not looking good. It's looking very, very bad, especially on a monthly basis. A quarterly basis, we could rally back, but on a monthly basis, not looking good. So I'm a bit concerned here. It's good to see a bid this morning, but the bond market is pushing back against the Federal Reserve. No doubt about it. From a higher level view, on an hourly view, we're catching a bid. Let's take a quick look at gold. Gold is not catching a major league bid here off of the rally in the bond market this morning. It's up fractionally. We're again back down below the 1500 level, and we saw a head and shoulders setup, left shoulder, head, right shoulder. Here's that neckline. And flushed down the toilet yesterday. So gold, not looking wonderful here. I'm long of the miners, but we're not going to talk our book here. We're long of silver. It's not looking wonderful. What, Patrick, why has nat gas been on a tear? I would need to do more research on inventories, to be honest with you. I can only speak to the charts at current to give you an educated answer. And I don't know how nat gas inventories came out last Thursday. Perhaps that goosed the price a bit. Let's go back to see the market reaction. Usually that report's given on 10:30 Eastern Standard Time on Thursdays. And you can see the rally really began here last Tuesday, and we've been stair-stepping higher. Maybe somebody was in the know with regard to the inventories report because we did spike on that report, pulled back, retested, and then we moved higher on nat gas. So my guess is that it had something to do with the inventories report last Thursday. But that's only a guess, speculation on my part. The chart looks good here. We're very extended. But natural gas, for anyone who has traded it for any length of time, you know that this is very, very volatile. And while it looks overbought at current, it can move higher. taking a look at let's go to the NASDAQ. I want to see how the NASDAQ is behaving in light of the Google earnings, Alphabet earnings. And of course, there's something wrong with this market. There's something unnatural going on here. The fact that Google getting trounced yesterday after hours and having no impact on the NASDAQ 100 is concerning, to say the least. Now, you are seeing RSI lose momentum. This is a 1 hour chart. Let's pull back here. I don't like 1 hour charts. You can see that we closed out the day yesterday fairly overbought. We're pulling back. I'm not predicting that we're going to crash here. I'm predicting that something seems very, very unnatural with this market. The fact that we are rallying on very, very light volume, and not just rallying, we are breaking out to new all-time highs on the S&P 500, and volume is just not there. It's just non-existent. Look at these volume bars. Very, very concerning. Let's take a look at see if we have copper up here. Copper was looking really strong. And Dr. Copper is just a signal of global growth, and it may tie into the energy trade. Oil had a reversal day yesterday. That's another chart we should take a look at. Light sweet crude. Bad day yesterday. I mean, a reversal on the day. We saw energy get hit. We are lower again this morning on oil. Let's just call this a pullback off the highs. But the energy sector really took it on the chin yesterday. Yeah, Patrick, I think it goes back to what we usually see on these reports, is that you get news and you get a knee-jerk reaction, and then all of a sudden the market takes it a different way, blowing out stop-loss orders. And it's just the algos looking at a report or headlines, scraping the headlines, saying, okay, this is a negative number, taking it down, but then traders rethink the headlines and then begin to bid the underlying whatever it is that's being reported on higher, whether it be commodities, whether it be stocks, whether it be the price of a cupcake. I think that knee-jerk headline news, the knee-jerk reaction on headline news is generally the wrong one. And you have to figure out by now, or think about by now, how much the writers of these headlines are playing to the algos. I think there's a bit of manipulation there, because it's just such a consistent event to occur that you get news that comes out, you get a knee-jerk event, you trade one way, then all of a sudden the direction changes and you have people that are just left with their faces ripped off, whether it be to the upside or the downside, and the market takes it the other direction. So I'm very, very skeptical of this algorithmic trading out there. So that's why I always profess, really wait until the markets settle down. And I wish Jay Powell would stop with these goddamn press conferences so we could see how the markets shake out between the 2 p.m. Eastern Standard Time report and the 4 p.m. close. He takes up way too much time with his chatter, and it just ticks a lot of people off, including myself. They've gone way overboard with transparency here, and that is a major concern. All right, so I'm going to leave things off here this morning with, I'll go over a couple of charts for Samuel, and we're going to shut it down. Let's go to TrendSpider. First chart up, KDMN. Let's see here. What do we have? Let's first go to a weekly view. And folks, if you haven't hit that like button, if I could ask you to do that, share with a friend, And if you're listening to me on Twitter, if you could please give a like, share with a friend, retweet. I'd really appreciate that. All right, so Cadman Holdings LLC, weekly view. Hey, Sam, could you tell me what sector this is in, please? It's on the CBOE. This is, again, weekly view. We have a breakout here on a weekly basis. We broke out the week of the 21st. Then this week so far, I'll go to a daily chart in a moment. We pulled back, done a retest, and we pulled off the highs of the day yesterday. I know this is a weekly chart, but we only have one day in the book so far on the week. And we did a retest of the breakout point, which is fairly bullish. So you're seeing the beginnings of a breakout here after a nice consolidation, a W formation forming, and the beginning of a move higher out of that consolidation. Now, on a daily chart, we had an outside reversal day last Friday. Yesterday, we rallied. We saw a continuation rally on a weekly basis, but we sold off the highs of the day. We may even, in fact, pull back and retest yet again on KDMN. But net, I think longer term, the shares are looking pretty good. Okay, thanks, Sam. PFNX. And I try to do things fairly consistently. I try to go to the higher level view. For the sake of time this morning, I'm doing a weekly view. Usually I'll do a monthly view before I get into a trade. Thanks, Sam. All right, so taking these trend lines off, automatically what concerns me here is that we were overbought relative to the third standard deviation Bollinger Band. We pulled back to retest the rising 20-period moving average. No problem there. This is generally what you tend to see when a stock overreacts to whatever, news, whatever's driving it above the third standard deviation Bollinger Band. It retraces down to the 20-period moving average more often than not. So the question here is, do we break out to new highs or do we fail? Do we put in a lower high? So that's the market putting a puzzle in front of us and saying, okay, figure it out. And the way I figure it out is I show patience. I wait. And I wait until we recapture this support level or we close above this resistance level. So I'll overlay the weekly trend lines. And you can see that for the most part. It coincides with my manually driven trend lines. And folks, if you like TrendSpider, this is the charting software, TrendSpider. There should be a link below if you watch this on the replay. And I will forward you, as a matter of fact, I should have this link available. I'll get this link for you. If you use the discount code CT25Z, you get 25% off. Yeah, I'll just pop it in there now. I don't know where it's going to take you. That's the chart itself. Let's see if that works. If you need the link to the homepage, I'll send it to you. All right, so we're looking for a breakout here, weekly basis on TrendSpider. And in fact, let's annotate this view. I'll create an alert. I want to know when we close above it. I always do this. PFNX. So what I like to do here is leave the weekly charts, the alerts active for a couple of weeks. So our alert is set on a weekly basis. Now on a daily basis, again, here's our alert. You can see that we have resistance above. So I wouldn't be a buyer here, Sam, until we closed above this resistance level here at the 9.74 level. And it's a good risk reward entry point, because if you want to stop out, set your stop, it would be a stop right below what should be a support level after you buy the shares. I would not be a buyer of these shares at current. Let's go to the last symbol here. CNST. All right, again, we want to go with a weekly view first. Not much data here. A monthly chart would not help whatsoever. All right, I doubt we have much data on monthly. That's correct. Let's check out weekly. All right, interesting stuff. So let's get rid of this. What's more important to me, rather than that trend line, is this trend line here. So what we did is we put in a higher low, then we broke out above the upper band of resistance in red. We did so here the week of the 14th. We rallied up into the third standard deviation Bollinger Band weekly basis. Then this week we pulled back. And not only did we retest a breakout point, which did previously act as the rising lower band of support, we actually also retested the breakout point, which was acting as the upper band of resistance. Despite the fact that we are down so far on the week, this is fairly bullish price action, assuming that we close where we are at current or better on the week daily chart. So the play here would be, ideally, if we were to pull back yet again and buy at the 11.45 level or the 11.63 level, or if we begin to break out above this upper band of resistance here, I would expect on that breakout, assuming that you got in about $14.25 per share, thereabouts, you're going to see resistance at around the $17 per share level. So I would look to book those profits. So from a percentage basis, you have a good ways to go if you buy the breakout here between the breakout and the upper band of resistance. I would look to book those profits there as a swing trade longer term. I don't know the fundamentals of the company. So investment-wise, I can't speak to that for a multi-week or a multi-month investment in these shares. And that is going to be it for this morning, folks. Everybody have a very, very profitable trading day, and I will talk to you again tomorrow on Swing Trading Today. And if you could, again, please, if you're following me on Twitter, share with a friend, retweet, and follow me there. If you watch this on YouTube, hit that like button, subscribe to the channel, click the bell button so you get notified of when I go live in the future. And if you haven't already taken that survey in the description area on YouTube, please do so. It really helps me out a lot. Everybody, again, have a profitable trading day and be well.